Yeah, I guess it would help if I turn the mic on. Hey, Gordon. Yeah, that would help. Hey, is this better? Yeah. Hey, good morning, everybody. How you doing? It's the 9th of December, 2015. Yeah, oil inventory Wednesday. And 1 week away from the Fed decision about interest rates in the United States. Let's do some technical analysis, huh? So, welcome to Forex.Today. My name is Wayne McDonald. I'm the Chief FX Market Strategist. Oh, I didn't even put that slide up. All right, well, let's do this. Hey, trading's risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results, but please stay small, stay humble, focus on the long term, never risk money, can't afford to lose. Just don't touch the stove, you might burn your hand. Yeah. Yeah, you can lose money. So be careful, huh? I didn't even put the me slide up there. Let me put the me slide. I don't know, it's just habit, I suppose, right? Hello, that's me. My name is Wayne. I'm the Chief FX Market Strategist for Traders Way, an ECN that gives you access to the foreign exchange market, but also energies, metals, indices, and everything else in the intermarket system that would affect currencies. Because remember, when money crosses a border, values change. Well, why would money cross a border? Well, to buy assets like an actual commodity, or maybe you're going to build an asset or invest, right? That kind of thing, like build a factory. And the money is going to go from the investors are going to move money from their country to the other country they're investing in. Or maybe you're buying a financial asset like a bond. So why? Why is money flowing in? Why is money flowing out? And that's what we should be concerned about. Remember, if money doesn't cross the border, it never changes valuation, and we never have an opportunity to make any money. These webinars are hosted at Forex.Today. Please register and attend. And as you already know, there's dozens of trading ideas up on the website for you for free every single day, posted by our analyst team. They're stationed around the world so that they're watching the markets 24 hours a day for you for free. Just stop by Forex.Today and please register. Let's do some technical analysis today. What do you stink? Smell like a plan? Minions got the coffee right today. So I have a guest today in my office. I adopted Willow. Yep. So I have a small dog that's now my trading companion. We got her from a shelter last night. She's our third or fourth shelter pet over the years that have, gone from troubled past to lavish lifestyle, and then they all died of old age.
For Germany, the finance ministry spokesperson.
So I'm thinking she's got 6 years with the McDonald family. Yeah, she's going to be a good trader, I'll tell you. Yeah, she's 8.5. All right. Yeah, 56, huh? Yeah, and she's ugly. It's hard to be an ugly 56-year-old woman. Yeah. But anyways, that's how I roll, yo. Totally gangsta. All right, so where are we in the world? Where are we in the world? All right, so let's... I didn't fire up my drawing tool. Un momento, por favor. I know I didn't get my French accent quite right. it's not French. All right. Where is it? All right, here we go. Here I go again on my own. All right. So here's the big move from last week. Okay, ECB's decided to wimp out, but yeah, it's the ECB. All right. So anyway, so we make our way back down off the 110 level, which is an interesting psych level, obviously, after the big news. It's moved hundreds and hundreds and hundreds of pips very, very, very quickly. Then we make a retracement back to the weekly central pivot point, right? Let's highlight again. This is the weekly central. Okay, can you see that? And there was a pivot point in here. This also right here is the psych level of 108, and it's a 382 Fibonacci retracement. So maybe we should, and again, we talked about this, Friday and then even Monday, and it's Wednesday now, but whatever. It's a fib. It's a psych. It's a central pivot point. And was that it? Fib, psych, central pivot. I guess good enough, right? Good enough for the girls I go with. All right, so fine. Obviously some support. You can see I have it predestined as support with my little gray zone, and we did that while this was rising as a place to buy. And then you can see it doesn't fit quite well on the charts because I had to squeeze it on the charts way to the right. I think even on a higher time frame, like a 4-hour daily. But you can see the idea was it might just bounce off this area, which is a cluster of support, and maybe it just goes up to about 110-ish, right? Or at least top-ish, right? Can you see how we already have this drawn? Okay. So since we drew this yesterday, it's gone from 108 to 109.50, 150 pips. You start adding that up and it becomes real money, right? And we're getting closer and closer and closer to, a top. Chris has only got 90. Oh, that's all right. You might have been tired, Chris. Well, good job, buddy. So, clear support, and now we're coming up to clear resistance. Maybe we can get this to 110. That'd be cool. Okay? And then if you were a bear, because a lot of people have told me, oh, they're just bears, and all they'll do is just sell low like this. And I'm like, no. I don't care how bearish you are. You never sell low. If you come up to this level and you're considering to be a bear again, you want to look on a smaller time frame, smaller than an hour maybe, like a 15-minute or a 5-minute, up in this zone which I've identified as black, which is, 109.80 to 110.20. If you see a short-term reversal pattern, right, like let's say low or high, then maybe, just maybe we head down to the next level. And that is really 110 to 107. Okay? But what's the other thing that could happen? Because remember, I can't predict the future. I can't tell you for certain what's going to happen. So what if that doesn't happen? What if it makes a higher high? And I'll give you a hint. We've already talked about it. Yeah. Well, there's one in there before 112, but Chris says 112. Kareem says 112. Rick Dubois says 1250, which is probably closer to the truth. But either way, Ricky says 11. No, I don't have it as 11. By the way, I talked about it right after the news. So we talked about that Friday. 115, no. 114, no. Thanks, Guy. Thanks, Joseph. 110.50. Whoop, whoop. 110.50. Thank you, Artem. Yep. High five, Artem. High five. Okay. And then that 112-ish, 112.50, even 111-ish, but just sort of in here first, right? But if this is going down, what I'd really truly like to see is, let's say we would touch 110, and we just sort of mess around and consolidate there. Okay. Now we see a bit of a dollar sell-off, and we see some yen strength today. What's probably creating that? Chinese news. I'm going with profit taking. Joseph says profit taking. I think it's just a lot of traders are simply done. It's not even trading per se, but let's just say anyone that borrowed the cheap yen as a funding currency, which is the basis of a carry trade, but it could just be other things. It's a funding currency, right? You can leverage up because it's free money to borrow, right? I mean, imagine that. You can borrow it for free. How much do you want? Do you want some more free money? Yeah, sure. Yeah, I'll take some more free money if you're just giving away. Yeah, so that just might be coming to an end for now. Not forever. It's not the end of the world. But, I don't know. It happens. And it's really hard for me to tell you whether it's going to happen before Christmas or after Christmas because I've seen both. Right? And I think the Fed funds market's already priced in the hike, and then we're going to listen to Grandma Yellen. She's going to tell us how quickly she's going to raise interest rates, and we'll digest that, over a Christmas dinner. No need to freak out, right? It's kind of how I'm feeling about it. I think the market's just good where we are. So let's pay attention. Okay. Is this going to rally all the way to 112? Well, it could, but I'm just wondering, are people really, do they really want to exit those trades? Well, yeah, maybe, right? So I kind of feel like there's potential to go up only because traders just might be tired of fighting. They might want to just call it a year. Start winding down positions, not building up positions. You know what I mean? So what would happen in that case? Well, we know the market's was heavily net short Euro USD. So you cash out of that, which means the euro gets strong versus pretty much everything, right? Okay. So euro would get strong versus pretty much anything. The US dollar would get weak against most things just because they're cashing out of the dollar long, which means they're dollar short now, just because the broker's offset. But you'll see that no one's actually selling dollar. No one's actually buying euro. They're just getting out of that. But all euro will gain in value. Fine. Dollar loses value. But also, if anyone is funded positions that are now being knocked out, with the Japanese yen, then the yen might get strong. Okay? So we need to look for that. There may be signs that give us hints that maybe that's not the case, and that maybe these bigger pullbacks are opportunities to get back into trends. Right? Not quite blood in the street, but maybe just bigger, longer-term buying opportunities. Okay, so yen a little bit strong, dollar a little bit weak. At the same time, you're going to get a nice little pullback. But then again, 2 days of bearishness on the USD yen only produces a 100 pip move. So, anyways, we're at this crossing point here. I think if we get a little higher than this, it may indicate a much another round of profit taking, and that would allow this upward move to last probably till the end of the week. Okay, so on a shorter time basis, that kind of gives you the move. You might want to trade it like a breakout strategy, where if it does break out, catch a little mini pullback, maybe on a 15-minute or a 5-minute chart, and slingshot your way up into the weekly M4 as your conservative target. Okay. Now the fact that the weekly central pivot point is the bottom on the Euro USD, like if you're just going to play pivot theory, right? So here's our bottom, right? This is the weekly central pivot. That predicts the WR2. That puts us at 112.50. If that is fulfilled. But like on a 5-minute chart, you might want to see like boop, boop, boom, boom, boom. Okay? And then most likely someone's going to take profit there, and then we come up here, and then maybe just consolidate while we get ready to wait for the Fed. Okay? That's it. So it's a weird scenario where the fundamentals here are just simply, this will go up if people keep getting out of the trade. Right? So like, for example, the fundamentals would show that the Euro USD should fall based on central banking policy differentials, yield differentials, all these different things, right? Future expectation of interest rates, future expectation of inflation, all of that would point to US dollar strength. So why is this going up like why is this skyrocketing? Because people are just simply taking profit. So, but maybe at some point, and we did this a couple months ago, maybe at some point these original bears get bearish again. Because they're like, oh man, I can't take it. We're back at 112. I just have to short it here. Right? You see how I have it marked? Let's see if I can grab that. There we go. Okay? So let me now highlight this area. I mean, that's looking pretty good, right? So the guys that shorted, because I think I shorted up here, right? This was the entry, right, where I pulled 400 out. All right, so let's, I think up here, if people played it right before and took this huge profit, got out near 105, and they find this, they might just, because they're traders, let's say they're just traders, right? They're just like, oh man, I thought I was done for the year, I cashed out big, but what? I just have to short that, right? Right? It's just like, I can't turn my back on that. I know it's still 2015, but we got another 10 days. I might be able to hold this all 2016. I just kind of have to take a shot, right? Yeah, there's my Christmas bonus, right? So I'm going to re-enter. I mean, that only works if you took profit down at the bottom, right? You're sitting all on this free money. You're all fat and happy and super confident. You're the world's greatest trader, right? You're like King Kong pounding on your chest, right? So whatever. So let it rise so then we can dump it. Okay? But again, I regress because we covered this 2 days ago. But anyways, look, it's happening. And if it breaks out, that's the next plan. If it reverses here, then create a scenario for that, right? Oh, snap. All right. So again, I know you know this because we did this again on Friday, but there's the current potential is for this. We head back up to the 50%, zip, 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 work our way down, lower, low, lower, high, lower, low, and everything's good. If that don't work none, then we take it up to the 111.5, 112, 112.50, whatever. We take it up there, and we fire for effect up there. Yeah. Yeah, what year was this that I did this? It's funny. It's like I went from looking younger than my actual age to looking older than my actual age. Like, all it took was like 100 bottles of red wine. And boom! Everything changed. I was never in the middle. I just went from looking young to looking old. But, that's the life of supermodels, right? Yeah, Mark, what my message was, I'm not predicting 85, but lots of people, back when this was 120, they're like, oh my gosh, the guy on Bloomberg and CNBC, he says it could go to parity. Who cares about parity? So what? What does that have to do with anything? So when I analyzed it using, I don't know, I think it was a Fibonacci extension, a retracement extension, it was more like 85. Yeah, so something like that. So, but people get in the way of messing that up psychologically. It's like, a gold should probably be $850, but it's not because everybody's supporting 1,000, right? They're defending 1,000, so whatever. I'm just saying that it shouldn't matter that much. I know it kind of at some point will mess up Draghi's stuff, but I think it could go down there. And I think the first time I ever traded euro dollar, I think I bought it at like 90 or 8, because if I recall, when it opened, it went from like $1.05, $1.06. I forget where it opened in what was it, 99, and then it fell all the way down to like 83. And then there was a coordinated central bank intervention to prop up the euro. And it went from, 83 to, I don't know, maybe 90, and then totally collapsed on itself. And then eventually started working its way up as it was, more freely traded, because at first it was only traded by, institutions, let's say. So, so it started to recover mostly on the weakness from the US dollar, because the U.S. economy was booming. And what do Americans do when they're booming and Americans feel rich? Spend money and eat. Right? They go out to restaurants and sit down in a big fat booth, and for some reason, 7 TVs need to be seen from every seat in the restaurant. Like, dude, I only see 6 TVs. But in all seriousness, what happens is consumers start spending because they feel like they have cash flow. They feel like they have access to credit and capital. They might not have any savings, but they're just so confident in the cash flow and other sources of income that they're just able to spend. And a lot of that spending is on foreign goods, where TVs and cell phones and laptops and, well, pretty much everything in the world is made outside the United States. And Americans are rich compared to most of the world, so it's just cheaper to make other people produce these things. It'd be too expensive to have an American do it, and that's really how global money flow works. So they say, well, we'll take our money and we'll buy stuff from outside the country just because it's cheaper. I mean, that's how the world works. So they buy stuff, and what happens to the dollar when they buy foreign goods? It loses value. The better America is doing, the weaker the dollar gets. because they're spending their money. So I actually like to see a trade deficit. I actually like to see America have a trade deficit because it means they have a job, they have decent income, they have more income than they have expenses, kind of. Maybe they're not saving, but they feel comfortable enough to spend, or they have access to credit, and they buy up everything in the United States, and then they find out that stuff gets expensive, and then they start buying up stuff from outside the United States. The money flows from the United States outside the United States. The supply of dollars on the open market and globally increases, the value decreases. And we export our inflation, right? Because remember, we're buying cheap stuff from foreigners. That keeps our inflation low. So let's say we buy a bunch of stuff from India. Our inflation's low because the stuff that we're buying now for our homes, right? You want to buy a nice little Ganesh for your home. All right, so you spend the money, it goes to India. And now you have this Ganesh, you put it on the wall, nice little elephant boy with a little mouse, and he protects your house. Great. So you bought that cheaper than you could have had an American make it. So anyway, so your costs are down, right? And that inflation goes to India. There you go, India, because now that's the dollar is exchanged into rupee, and demand goes up, and inflation goes up. Oh, very auspicious. So that's interesting, right? So I actually want to see a trade deficit in the United States. And our numbers, they're not great yet, right? So here's what will probably happen if you want to go through the quick, 10-year cycle. Dollar continues to get very, very strong for about, 2018. Okay? And then we're going to start buying euro. Not very good, right? And yeah, so euro's going to get strong, and then dollar's going to get weak. Yeah, but is that a bad thing? No, Europe's recovering. Interest rates will be going up in Europe. That's going to be the new game in town. Americans will already be rich. We already bought our cheap Mercedes and cheap BMWs. And cheap, Porsches, right? Because the euro would be so weak. I mean, let's say the dollar actually is worth more than the euro. I mean, I took my wife to Paris and proposed to her, 1,000 years ago, and the euro even back then was $1.30, right? So, if suddenly it's 90 cents, it'll be pretty fantastic, right? And that makes Mercedes cheap. Why would I buy a Ford if I can get a Mercedes, right? So anyways, actually, I like Fords. But I'd rather have a Mercedes. I wish Mercedes would make a pickup truck. I'm not joking. It's on my wish list. What do I want for Christmas? I want Mercedes to make a $100,000 pickup truck. Yeah. So anyways, so the whole process will reverse. The euro will get strong, the dollar will get weak, but that's good because we will be spending our dollars internationally, and therefore the demand is going to go somewhere, and those currencies are going to go up in value, and the dollar is going to go down in value, and everyone's going to cry, oh, the dollars are losing value, but what they don't understand is it's all right. Yet the G-Wag is not quite right. Yeah, when my son was born, I bought him a G55, and he loved it. Is that right, Mark? If you got a link for that, send it to me. I've been talking about it for years. I'm like, Americans, poor Americans, and I say poor, you make less than $100,000 a year. In America, I think that's poor. And you go out and you see guys that make, $60,000 a year, and they have $50,000 pickup trucks. I'm like, what? Where do these guys get this money? They're beautiful trucks. But I'm like, really? Wow. So, right? So apparently you only need to make $125,000 a year to buy a $100,000 Mercedes pickup. All right? So anyways. The beast says that's a mean machine. Yeah, I'm telling you. Yeah, and I had to drive all the way to Alabama to adopt this dog. Let me tell you. First of all, lots of Americans drive pickup trucks out in Bama. But another interesting thing, along the way, in a place called West Point, Georgia, which is just on the border, like maybe just a few miles off the border with Alabama, is a huge brand new Kia car plant. Kia. Korean. It's huge. Huge facility. And Mercedes is moving their U.S. Hub, their U.S. headquarters is moving to Atlanta as well. Very interesting world. Apparently because, people that spend 100% of their annual income on a car. What good investment, dude. Yeah, that Ford F-150 is going to skyrocket in value. But, you got a nice truck and you watch the football game and we're all good. Life's good. So, give me a currency pair, any pair, and we'll continue. Now remember, I've covered euro and dollar together, but that should correlate amongst everything. So if you're like, well, what about euro, pound or euro? Well, look, it's going to be the same thing. If euro dollar goes up, do you think the euro pound is going to go down? Of course not. We're talking about this is 40% of the entire Forex market, guys. So if euro dollar goes up because there's more profit taking, euro's going to be strong against everything. So you should say, well, what about euro pound, Wayne? Well, euro will be strong. What more do you want? That'll either move up more than the euro dollar or less. So which one's going to be weaker, the pound or the dollar? The dollar, because we know they're getting out of that euro dollar short. Therefore, the dollar is going to be very weak because we know the market's so heavily net short, and the euro dollar is 40% of the entire market. So dollar would be very weak. So pound dollar should go up, but not as much as euro dollar because there's more money on the euro and blah, blah, blah. So you should be able to just, all of this, just snap in less than a half a second, just be able to just, see one thing and know how it applies to everything else. All right, yeah. Let's do some Kiwi. I'm good with Kiwi. What do you? Let's look at it here. Let's go back to the Kiwi Swissy. The Kiwis are big on dairy products, right? Well, Sarah, what I said on Monday. Why isn't this loaded? There we go. Oh. What I said on Monday is that you should get into the trades either, a few minutes after the announcement or a few days before. So if you were looking to short this, you should already be short. Or if you're looking to long this, you should already have your support and resistance identified. Now is a bit late. Okay. I think I lost 1 pip on this trade. I believe I bought it here and went up. I was up 100 pips or something, and then I got knocked out at 0. Collected 2 days of interest payments, right? $9. I go to Little Caesars and buy 2 pizzas for that. Yeah. Hey, you know what? It adds up. If I only did that a million times, I'd have $9 million. All right, so now what? That's pretty classic trading, right? Breakout retracement. We're in here right now. So yeah, you could be setting this up for a short. You're a bit late, you know, but I don't know. You're even missing the second chance here, but okay, because it made the lower low, so you drag that out. So now, if it makes another low, so once we're down here, if price is down here, okay, you might want to try this as the new short. Okay. And then if this breaks, where's the low? The most vulnerable part of this trade, if you're going to continue trading it bearishly, the most vulnerable part is this area, because this is where we could double bottom. Whoop. So if it doesn't double bottom, you're golden, right? We're going down to the next level of support, which could be, I don't know, maybe this huge green area right there. Maybe. I don't know. And then what? I think the market's still going to be heavily bearish because everybody expects the cut. So we hiccup for a while, retrace, and then let's go to the more aggressive target. Is there a psych level in there, though? Right? I thought there was. 650? Not quite. So anyways, eventually the aggressive target is right in there. Okay. Somewhere. I think there'll be a hiccup in there. I was just trying to figure out. I have it marked from yesterday. We did this too, right? Let's see. Yeah, there it is. So I'm trying to figure out what it was, though. Yeah. Oh, yeah. So I already have this. I think it goes back on a daily chart, too. Yeah, it kicks off there, so on and so forth. So, yeah. See, bong, 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 bong. Yeah, so anyways, so it's all been done, just so this is just a friendly reminder. Okay? But again, what you should be doing is looking at your calendar. And so let's go out to an hourly. You should be looking at a calendar and making this trade, you know, much, much sooner. Ideally, your stop is way up here at break even, and you're just going to let this run. I mean, if they cut, really, if they cut and then so you say some negative things, you know, really you should be playing monthly pivots. I mean, it could. This is the type of news event that would, you know, break through weeklies. Okay? I mean, I can't predict it using this chart, but you might almost want to use monthlies. Okay? Now, using the pivot point theory that I used earlier, if the central pivot point is your top, remember last time I said if the central pivot point's your bottom, the R2 is your target. Well, the reverse is true this week. This weekly central is the top, not the bottom. And the extreme target for the week, or let's say the likely target for the week, is weekly S2. That's just the likely predicted in a normal market type move. Okay? So an interest rate cut, a change, it's not even the fact that it's an interest rate cut, it's the fact that it's a change in central banking policy, and if anything's going to break the market through its norms, it would be something like that. So you could even, you know what, why don't we just do it now just for fun, you and me. I could do this. Let's go to my indicator list. I'll go to my history, pivot points. Give it a click, a little whoop. And let's go from weekly to change that to false and go monthly, true. Zip. Okay, and close. And, okay, monthly R1 is the top. What's the predicted bottom using pivot point theory? Monthly S1. Very good, Debista. By the way, how's the weather in Nepal? Wait, wow, we had such a lame month last month. We're already through that. We're already, so is that right? Are we going to monthly S2? It's the same thing, monthly and weekly? Oh, because it's, weird. All right. Well, then it's the same thing. Yeah, I was thinking it's probably pretty cold in Nepal. Really? During the day or at night? Yeah. That's the cool. Yeah. Wow, that's amazing. Yeah, I'm in the south, man, and it's not far off of that, really. Yeah. All right. So there's that. There's the kiwi. It's going to be interesting. So dollar week, pig is going up, which is nice. You might be a little more bullish on pig. It's going to challenge. We should probably, since I think we're getting pretty close to tickling it. Why don't we look at the pound dollar daily chart, if you don't mind? I know someone that climbs the mountains of Nepal almost every year, and they won't allow him this year, even though he's done it dozens of times. Do you know why? He turned 80. And they're like, we can't insure you. We can't get you insurance. But he does it all the time. He's 80, and he's almost always like the first or second person to the top of the mountain. And they're like, yeah, we can't insure you. We can't do it now. The magic number is 80. We can't do it. You can do it, but we can't. Isn't that amazing that at 80 he just does this? And then when he's done Nepal, he goes probably 2 or 3 times a year to some exotic place and hikes the mountains. Amazing, huh? All right. So what's forming on the pig? Well, first of all, we're through the 50 level. That's the huge psych level, guys. Huge. Is it possible, is it plausible that we got ourselves, zippity-doo-dah, zippity-a kind of stuff? Okay? Because even though this is bearish, we looked at it on the weekly chart yesterday, remember, as we get closer and closer to that bottom that I showed you, my spidey senses are telling me that the pound is going to get stronger, even though the technicals say it's going to go down. I think it was saying it was going to go down to 136, right? But I've been very clear, even this in August when we were setting up this bigger short, I think we shorted at 160, wasn't it? Here we are, 1,000 pips down, and I even back then I talked about, I think around that double bottom we could start to see a recovery. And so I'm always interested in like this could be a reversal pattern, right? Right? We 786'd off the bottom. I mean, it's not aggressively awesome, but what if we get back above 151, 152? Are we back? Are we on our way to a 3 or 4 year rally? You know, but we have a challenge. And that's why I want to show you this chart. Because you should already have this analysis, right? Let's look at it this way. And I have a bit of concern going on here. Right? And we're running into this. Okay? If we break that, the next target is the 55, but keep in mind the 55 is dropping, but that gets us to 52, and that's definitely a higher high off that area. Okay? Now follow these orange lines that I put here, I don't know, 6 months ago. Let's follow the line. Okay? So way back here on December 31st, this is a year ago, the pound versus the dollar was worth exactly the same amount of money. How'd you do this year on the pound? Don't ask. Interesting, right? So the 150 level is very, very powerful on this pound, on this pair. The next level of interest, of course, is way down here. So I don't know if we're heading down farther, or if this is, good enough. It is year end, isn't it? Wouldn't it be something if we had something similar where December's like this and then January and February is like that again, and then we find ourselves down here in May? Okay. I can't tell you which one's going to happen because I don't know. So you need to make your decision. Right? So the decisions are, going back, the big one that we've done 100 times, in fact, I just did it yesterday, very clear. You're either trading that, and you're a bear on this, right? Or you're going to look for like a reversal here, or you're going to look for a reversal here. Okay, one might happen now, between now and the end of the year. One might happen on pound dollar. I guess right around the end of the first quarter when we start to get the better than expected GDP. You know what I mean? But again, that's something we talked about a long time ago. So if it doesn't move here, then maybe down here. And then you ask yourself, do you really want to short the US dollar? If you don't, then find something else. Mark says down for the next 3 months? Yeah. And then all of a sudden, good first quarter numbers, and then up. Sure. But look at this. It still could go up from January 1st to February 15th. right? It could do that, couldn't it? And then first? I don't think so, though, unless it's going to reverse now. Oh, man. Because I think the fundamentals are different. So you can't take the technical pattern. I can't grab this for some reason. There we go. Okay. I think the technicals are totally different. I mean, the fundamentals are going to be totally different here. So so Mark says, this way basically, and then up. Yeah, I think that would either be the case or up now. Someone should Google the date of the next WEO release. That would also be good if that was sort of somewhere in there around March. Would somebody do that? Volunteer that? Maybe you'd tell us tomorrow? When's the next IMF WEO? Any volunteers for that? Danny's got it. Thank you, Daniel. Jimmy says, what is it? Okay, good question. The International Monetary Fund employs hundreds, maybe thousands of economists and PhDs that study very intensely economic data out of essentially every country in the world, right? And a few times a year they publish it, and it's called the World Economic Outlook. World Economic Outlook. Richard, it could be. We don't know until it's fulfilled itself. But it could be, certainly, especially the way I showed you on this time frame. Because you're only looking at the inverse head and shoulders in here, right? So on an hourly chart, it might be worth the shot. And in particular, I think it would be fantastically interesting if we were up here. And then I would buy that. Boom! So I wouldn't buy it at 51 now, but I would buy it at 51 later. Yeah, what is it, like April 13th or something, Chris? But, I'd like an exact date if we could. 15 to 17. All right. Thank you, guys. Thank you, Chrissy. So wouldn't it be interesting, let's say, that we start to get decent numbers out of the UK, and I've already explained why I think that's likely to happen. So if that is the case, then we'll start to feel a little bit better about the UK, which means that it'll already be priced in, will already be long. And then the IMF is going to come out and tell the world they like the UK economy. And they're going to upgrade their outlook for the UK economy. And that's usually a turning point. And will probably be long for the rest of the year. Yeah, I hope you're okay with that. So so now you're worried about April 15th, guys, and not for tax reasons. Oh, Mark sent me the Mercedes pickup, man. Holy crap. Yeah, it looks like a Toyota. Shoot, give me one. Thank you for that. What time is it? Is it 8:30? I've forgotten. Do we have news at the bottom of the hour? Baltic Dry Index 546, just unbelievably pathetic. It's redonkulously bad. Hey, my new dog is snoring behind me. How cool is that? Well, thank you, Joseph. Yeah, that's my book, but I don't necessarily go into price action. Yeah. Yeah. But it's a good start, for technical and fundamental analysis, trader psychology. All right, so I don't know. Let's do one more quick. Yeah, let's do oil, right? Because we got crude. So today is Wednesday. It's oil inventories day. And so that's out at 10:30, which is 2 hours from now. And a rise in surpluses would weaken the Canadian dollar and other oil currencies like the Norwegian crown, Mexican peso, right? The Russian ruble. So I got oil on the left and CAD yen on the right, and they're supposed to do the same thing. It's not updated. Let me just double check. It's active. Here. And then put it back. Okay. So that's how you trade it. For example, right now, if you want to sell oil, maybe you just sell CAD yen. Chris has been short this pair since yesterday. Good job. Okay, you can look like the last 24 hours it's moved only like 50 pips, right? But let's move this out to a 15-minute chart. You see a dramatic drop. Okay, you fib it. The other thing I teach you when you are doing price action, you take the previous low and you drag it across, and potentially it's your next sell zone. Pretty cool, right? And we're testing the bottom, but the 618 predicts a 1382. So we're looking at 89. So another 100 pips, 120 pips, if we can break through this low. So you've been on it all day, so I hope you break through it, Chris. How do you know where to draw the fib? Well, first of all, fibs are subjective. So someone else might have it drawn, like this, right? But what they're doing is they're trading a different time frame. Okay? In this case, on this time frame, you wouldn't be selling a fib, you'd be selling the 21. Okay, because that's why the 21's there, right, guys? If price comes back to the 21, you sell it. I mean, that's why we have it on our chart. So on that time frame, that's what you're doing. On this time frame, it's just too much of a study. So you're doing a peak to valley study on the most recent peak to valley. And that's how I would draw it. This low, this is the lowest low, this is the previous high, right? And that's how you study it. In this case, what you've sold it at a 60, 2/3 of a discount. So again, if it does break through this area, in particular, it's really got to get through 90, right? But whatever. If we can make a low lower than yesterday, then we should extend to the 1382, according to pivots. To fibs. If you're using daily pivots are top, so S2 is our bottom, and it's saying 89 1/3. So why don't you just say 89.50 is your aggressive target, and be done with it? What do you stink? Smell like a plan? Cool. So I'll see you guys tomorrow. Happy trading. Peace on earth. May the pips be with you. May your profits be above average. Thank you for your time and your loyalty, and I hope it helped. Thank you for the good questions. And if you're new here, is anybody new? This is your first or second time? Any newbies? It helps me know what kind of information I should be providing. Yeah, a few people. Will I see you tomorrow? Yeah? Cool. So if you're brand new, welcome. There are people in the room with us today that have attended my daily webinars for 5 or 6 years. So just a little heads up. This is you might be joining a family and a team. You might be my new best friend. Yeah. So again, peace on earth. May the pips be with you. May your profits be above average. Thank you, guys. I'll see you tomorrow. Cheers.